Hello, and thanks for joining us. I'm Ben Spade with the Menke Group, and I'm here with Trevor Gilmore, CEO of the Menke Group. And we're going to answer a few questions about who is Menke and Associates, the Menke Group, and the top 10 questions you should ask your ESOP advisor before you implement an ESOP. Trevor, how many ESOP transactions have you advised on in total, say in the past 5 years?
Yeah, great question, Ben. So at Menke Group, over the past 5 years, we've done in excess of 120 ESOP transactions.
That's awesome. What's the typical size of these types of transactions?
So funny thing about ESOP transactions, there's no typical size. So when you take a look across our client base, some of these transactions have been for as little as 5 million. Some have been a billion. So kind of a wide spread there in terms of, company size and so on. But when we take a look at industries, which we'll probably talk about in a second, there are some similarities.
Yeah, that's quite a range. Well, and you touched on industries. Do you specialize in any particular industry?
So lately we've been doing a lot in the AEC space. So AEC, I mean architecture, engineering, construction. Sometimes you see the C mean consulting. So we do a lot in AEC with C meaning both construction and consulting, and then followed by professional services that can encompass consulting as well. And some manufacturing out there too, but very strong in the AEC and consulting space.
That's great. So when you mention those, the AEC type companies, they have a lot of regulations sometimes that are, kind of box them in. How do you ensure ongoing compliance with, not only ERISA, but IRS guidelines, Department of Labor, things like that?
Yeah, great question, Ben. So we have a full team of ESOP investment bankers, ESOP attorneys, and ESOP administrators who are all credentialed. And since we've been in business now over 51 years, we started in 1974, that collective experience over the past 51 years has really given us a deep bench in terms of knowledge and experience with all the transactions and clients we've worked on throughout that time. A bit of, in summary here, it's, both history, the depth that brings, the experience that brings, and on top of that, our very talented, long tenured professional staff that we have here that keep up with the rules, regulations that change under IRS, under ERISA, and so on.
Yeah, it seems like those are ever changing. That's great. Then it is quite a deep bench too, being there since the beginning. All right, so now let's move on to the top 10 questions you should ask an ESOP advisor as you're thinking about an ESOP transaction. And Trevor, I'll ask these of you, and you act on behalf of if someone were asking an advisor from the Menke Group. All right.
Sounds great.
Perfect. So, what approaches do you use for financing these ESOP transactions? Basically, how do the selling shareholders get paid?
Yeah, so most ESOP transactions out there are financed two ways. One is the bank bringing a outside third party senior bank to come in and provide financing for the transaction. Another common way is seller financing, which sometimes is referred to as seller notes. Usually our transactions have a combination of the two. Now on the financing side, you do see trends of private credit funds, coming in and wanting to lend, private equity funds, and so on. So overall, big picture, the key takeaway is if you're going through an ESOP transaction, likely you have financing options out there above and beyond seller notes. And part of our role is to uncover that and figure out what the best financing package is for you.
That's great. And kind of piggybacking on that, this is, question two, how do you evaluate the balance between the liquidity for the selling shareholders and then the long-term sustainability of the ESOP itself? When you talk about bank financing, yeah, that might get me the most cash at close, but where do we find that balance?
Yeah, great question, Ben. It really comes into understanding the cash flows of the company and what the key objectives are for the selling shareholders. So there's always a fine line there between, maybe levering the company up high so that the sellers get max cash at close versus them taking a seller note. So such things come into play if they're doing the 1042 rollover, and I know that's an acronym out there, but that's a strategy where basically you can defer your capital gains. That typically requires more cash at close. But on top of that, you have to really understand the company's balance sheet as well and understand the debt capacity and what they're comfortable with. Most banks, by and large, are going to come in and probably lend somewhere between 2 to 3 times EBITDA on a company with not much debt and strong cash flows, right? So that kind of protects the company and so on. But again, you have to really understand the ratios, cash flows of the company, the balance sheet, and what makes the most sense here. So there's no one answer that fits all clients. It's very much client-based, client-specific.
So when you're talking about looking at the financial statements and kind of how does determining the sustainability, are a lot of buzzwords get thrown around like a stress test or feasibility, or are we talking something like that?
Absolutely, yeah. So when you take a look at the balance sheet and the projected cash flows of the company, you always want to stress test that and factor in, okay, is this base case, what does it look like if the revenue mix changes, profitability on projects, backlog changes, and so on. So you always want to stress test that. And on top of that, the bankers who are taking a look at these deals and running their own models, they're going to be doing the same thing as well to really understand, okay, how does that fit into our risk profile, risk appetite, to get comfortable with that. So it's an iterative process, and it starts off with sound financial understanding of the company and also the key goals and objectives, of the company and the selling shareholders.
Absolutely. And then you kind of piggybacking on that, goals and company goals and objectives and seller goals and objectives. For the next question, what role should the selling shareholders continue to play alongside the new employee owners?
Yeah, that's a great question. And it really depends on, one, if they're selling control to the ESOP or not, two, what their overall retirement or overall succession strategy looks like. So I'll give some examples here. We do a lot of partial ESOPs, and what I mean by that is less than 50%. And the idea there is get some liquidity for the shareholders, and maybe it's in conjunction with their well-timed retirement or overall exit timing from the company. It could be several years out, right? And so on. Other situations, we do 100% transactions. And again, we do a lot of 100% deals here. And often there it's, more immediate succession, meaning, hey, I built this company. I want to get liquidity, have an awesome management team, an awesome employee base who's ready to take over. And let's get me bought out, by way of this ESOP, and I'll stick around for the next couple of years to oversee an orderly transition. So yeah, there's no one right answer there. It really comes down to what makes the most sense and what is the overall goals and objectives, for those selling shareholders, for the company, and so on. So we see it across the base, some who don't want to retire, until maybe 10, 15 years out, but they want to execute this ESOP now as one of their strategic plays, get it set up and really set themselves up and the company for success, versus, hey, let's do the ESOP and I want to retire tomorrow, which we've seen that play as well. The key thing here is really having a strong company, strong management going to really take the company to that next level and be employee owned, with all the benefits that you get by being so, to really help you get there.
Absolutely. That makes sense. And so can you speak a little further about maybe one of those sellers that's 10 or 15 years away from retirement? Can they remain on the board? Can they remain in an executive capacity? What do you mean when you talk about still being active with the company?
Yeah, and again, it's okay. What is the intention with the ESOP? And one recent deal that we worked on earlier this year, the father and the uncle had started the company 40 years ago, and they were both retired. The son, who's now in his mid 40s, is the CEO and president, and had us come in, install an ESOP, to buy 30% of the company. And the idea there is get liquidity for those initial shareholders and spread ownership amongst all the employees and give them skin in the game, because he has a great 5-10 year growth plan. And since he's in his mid 40s, his retirement is not, going to be for the next 15 plus years. So ESOP provided liquidity, and it gave you that platform to really scale the company for that next tranche of growth that's going to happen with this company, and a marketplace as well. So a couple of years later, you can always sell more to the ESOP, very flexible, and then possibly go 100% ESOP. So that's one example. Other examples are selling 100%. However, if the seller retains a seller note and is still, possibly the CEO working on their overall succession, okay, they want to make sure the company is still being well run, is paying the seller notes, and so on. Often you'll see them take a board seat in that case, along with, and we'll talk about governance changes as well, often independent members and so on. And, it all depends from the get-go on what the initial board makeup of the company is. Some of these companies have small boards, very informal. Others have, very much a formalized board already in place with independent members and so on. And, if you move to 100% ESOP transaction, you're going to see a very much a formalized board, as part of the transaction. And we're seeing that in even the minority transactions as well. It's always good for corporate governance, to have that strong board in place.
Absolutely. It sounds like there's a lot of moving pieces. So, if I were to hire you, question 4 here, if I were to hire Menke, what does a typical engagement include as we look at a transaction?
Yeah, so we always start off with initial feasibility analysis, taking a look at the company, its position in its marketplace, what that value range looks like, what are the key goals and objectives of the existing shareholders and of the company. Once we get to a overall transaction structure that makes sense, then we move forward with the overall deal. That involves interviewing and lining up the appropriate trustee candidates and their deal team, so their appraiser, their legal counsel, talking to banks, doing a bank shop, and overall orchestrating the transaction. So one value add that we have above and beyond our 51 years in business is the fact that we have a full investment banking and legal team and TPA/administration team in-house that really saves time and money for our clients, because you have basically one team versus having to hire different parties, who might be on different communication channels, right, and so on, and trying to orchestrate that. So you have one team to execute the deal, and then ongoing, we've been talking a lot about ESOP transactions, but also we do that ongoing record-keeping component and the ongoing advisory related to that. So we have a lot of clients who have been with us on that side of the business for 40 plus years, on that record-keeping side. So we enjoy doing that, doing both the transaction itself and making sure that the company is successful in the future by being their ESOP advisor and record keeper.
Awesome. So I've got a company. I hire Trevor at Menke to sell to my employees, and we've concluded the transaction. Everybody's happy. The ESOP's in place. Question 5 is, how do you handle employee communication and that kind of cultural integration around employee ownership? Do you stick around, or are you gone after that point?
Yeah, so employee communications is part of all of our engagements. So we have a team that comes out, works with the company on the employee rollout. I've done several. They're always really fun to do because, the minute the leaders of the company inform everyone, hey, we went ESOP instead of being acquired, by a third party, whatever the case is, there's a lot of excitement in the room. So the challenge that all ESOP companies have is to keep that excitement going long term. ESOP can be complex. There's a lot of education, and so on. So to solve for that, we do the initial communication rollout, but we have an online dashboard called menkeesop.com that all of our clients have access to, including their employees. So they can go on there and watch videos about the ESOP, calculate the retirement projected benefit, get their ESOP statements, and so on. So we've really found, Ben, that communication is ongoing, not just one point of, in time in essence, but it's good stuff. And once employees understand it, which can take time, usually I say after 3+ years of being in the ESOP, you start getting these statements that start becoming material in value. And when that happens, that's usually when any disengaged employees start becoming really engaged with the whole ESOP concept, is when they see those statements that have real value.
Yeah, you're absolutely right. They've got a stake in the operations of the company now, and 3 years in, I start to see some real money in an ESOP balance, and that's pretty motivating. You're right. So we're moving forward, and when we're doing good things with this ESOP. Question 6: are there any emerging trends or regulatory changes in the ESOP world that I, as this selling shareholder, need to be aware of?
Yeah, good question. So, a lot of the regulatory issues lately have kind of been centered around valuation. ESOPs, for the most part, we're talking about private companies, right? And the trustee hires an independent appraiser, who values a company, right? And there's a negotiation on price and terms, just like any other business M&A transaction. So a lot of the concern is on that, of course, is the fact that ESOP cannot pay more than fair market value. Of course, we all know valuation is art and science, and it's a range. It's not just one simple number, 5 times profit or whatever, right? It's always a range. So we see that. And then on top of that, plan operation. You want to have a strong team, making sure that the plan remains compliant with ERISA, with IRS rules. There's things out there like 409P, this is an acronym for S Corps, and so on, that you have to remain compliant with. And then on top of that, in terms of trends, one thing we're noticing is a trend for actually younger sellers lately who are very much intent on creating a solid succession strategy well ahead of time versus, waiting till they're much later in their career and they might not have any other options, So we're seeing that, and that's interesting. That's fun because it's very strategic. It's fun to work with planners who are thinking 10, 15 years down the road, what do they want to be doing, where they want their company to be at, and so on. And also with the idea of, hey, when you give employees skin in the game, they're ideally going to work smarter, harder, et cetera, and have that positive outcome, and we see that in the ESOP data out there. There's a lot of ESOP millionaires, that retire with, healthy account balances. And other trends too, we're seeing private equity as well being more interested in the ESOP space, whether it's putting a minority ESOP in, we've seen that, or they come in to buy an ESOP company and maybe retain the ESOP, just owns a smaller stake, or maybe co-invest alongside. So, we're seeing some of that out there. And then, there's renewed interest as well, I think, nationwide, with this idea of the ESOP, and since it's been in place now 51+ years, you kind of go through these up and downs on its popularity. And I think we're back on that upswing, based on what we're seeing out there.
Right. And with so many ways to create an ESOP, fund an ESOP, they all look the same. Different companies have ESOPs. Question 7: what separates thriving ESOP companies from those that struggle or ultimately wind down?
I think the biggest thing, and I know this is a total cliche, is culture. There's some companies that just have that culture where an ESOP just makes tons of sense. Number 2 is the overall strength of the company. And by that I mean, what is their moat? What is their competitive advantage? How are they going to stay positive cash flowing well into the future? It often comes down to your people and culture. So it's often that.
Culture is very important, and you alluded to this a little bit earlier, but so is succession planning, and the next line of executives, of frontline workers, that sort of thing. Question 8: how do you recommend managing succession planning once an ESOP is in place? Once we've got the employees own the company. We'll say 100% for this example.
Yeah, so and that's definitely a board matter, is overall C-suite succession. So you want to understand, okay, what is the runway we have with our existing C-suite? Is there a successor identified? If not, does a board need to focus on finding that successor? And that involves very honest, open, and frank conversations between the C-suite, between the board, so that everyone's aligned.
That makes sense. So alignment in the ESOP, or not in the ESOP, sorry, alignment as it regards to succession planning, and as the future holds. How do you guide companies on board structure and corporate governance after an ESOP? Question 9, yeah, how do you guide companies on board structure and governance after an ESOP?
Great question, Ben. And no two companies are the same. So you have to start off with, where are they at now? What is their board structure like? And from there, you have to iterate and say, okay, where should it be for an ESOP? Of course, this is part of the negotiation. ESOP comes in and buys control. There's definitely going to be board changes. You're going to professionalize the board, probably have more independent members on the board, more committees, right? And so on. So there's no right answer there in terms of what our initial approach is. We always have to start where they're at today, meet them where they are, and see, okay, what is possible? Because you want a very effective board, you want a high performing board, but you also don't want to be too overly bureaucratic, right? Where you're having, too many meetings and so on, right? So, in my opinion, the board's one of the main roles of the board is to make sure the company's performing, supporting the CEO, the C-suite, and so on. And that would be an effective board. The company is firing on all cylinders and the board is helping to make that happen. So you start off there, see where they're at, and see where they need to be.
Absolutely. And you've talked a lot about culture and implementing an ESOP, about once they've got skin in the game, the employees have skin in the game, that sort of thing. And question 10 is going to kind of sound silly because you might be biased, but I'll explain it a little bit. What's your philosophy on employee ownership culture? And, basically, am I hiring you to just get me to a transaction and get me paid, and then I'm, riding off into the sunset, going and playing golf, whatever I do when I'm retired? Or are you more concerned with ESOPs as a whole, the ESOP industry as a whole, that sort of niche in retirement plans? So yeah, what is your philosophy on ownership culture, employee ownership culture?
Yeah, so employee ownership culture, yeah, good question here. So when you think of employee ownership culture, it's more, hey, do I think like an owner? Do I act like an owner? And do I care like an owner? That is ownership culture, in my opinion. It's hard to teach. It's hard to adapt. Some companies have it, some don't. Hiring us to do an ESOP, and install one is not going to change the culture. It changes people's pay, and they get this retirement benefit accruing, and maybe some of the selling shareholders get a cash out, right? And so on, and get liquidity there. But the ownership culture part, that can be hard to change. Companies can hire consultants and so on, to try to work on it. Can you work and change culture? Absolutely. Will an ESOP do it? No. What will is tone at the top, right? So how the board treats culture, how the C-suite does, how the management treats it, and then on top of that, all the employees, right? And there's strategies out there, open book management. There's all these different plays out there. EOS, Entrepreneur Operating System, is another one we see a lot of our clients do, and so on. So there's ways to, try to get everyone adapting to that culture and everyone on the same page. But just in summary, culture is a lot of things, but ownership culture, in my mind, is, does everyone at this company think like an owner? And by that, I mean, do they care about the company? Do they care about its, future? And do they think about it the same way they would think about, hey, I own a house, I'm to maintain that, right? Versus, maybe renting a house. I guess the best analogy is no one no one washes a rental car,
Mhm.
right? That's the same thing. Are you a hired hand versus an engaged employee with an ownership mindset?
Perfect. That's a perfect question to end on, perfect answer to end on. Thanks, Trevor, for your time today. Why don't you let everybody know the best way to find you or get a hold of someone at Menke?
Yeah, thanks, Ben. And yeah, great talking. You can reach out to me both via email, website, menke.com, LinkedIn, Trevor Gilmore. If you find me, I'm the one that works at Menke. There's a few of us on there. So yeah, great talking, and thanks again. Great questions.
Yes,
Hope
thank you
everyone
very
learned
much.
something.
Yep. Hope everyone learned something. Have a good day. Thank you very much.
Take care.
Take care.